Coming up on Market to Market, the reports are in. The market's reacted. We break down the numbers with Elaine Cubb, Mark Gold, Angie Setzer, and Darren Newsome. Next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, March 30 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Two much-anticipated USDA reports were delivered on Thursday that made for plenty of action before the trade closed up shop for Good Friday. On this edition of the program, we're going to spend the entire time breaking down the numbers with our select panel of analysts. But before we discuss what happened, we'll set the table with this week's commodity market closes. For the holiday-shortened week, May wheat was off 9 cents despite gains in the final session. The nearby corn contract added a dime. A reduction in the number of soybean acres made for a 28-cent rally Thursday, resulting in a 16-cent gain for the week. May meal added $6.10 per ton. In the softs, a shift to more cotton acres ran out the bears as the May contract gained 74 cents at the close, but remained 37 cents per hundredweight lower for the week. Over in the dairy parlor, April Class 3 milk futures were 2 cents higher. The livestock sector continued its mixed outlook as the June cattle contract gave up $3.62, May feeders fell $3.27, and the April lean hog contract gained $2.40. In the currency markets, the U.S. dollar index gained 78 ticks. Crude oil lost 94 cents per barrel. COMEX gold shed 28.47 per ounce, and the Goldman Sachs commodity index moved up 2.5 points lower to finish the week at 452.20. It is against this backdrop we begin our discussion. Here now to help us drill deeper are four of our regular market analysts. Mark Gold is a managing partner with Top Third Ag Marketing. Elaine Cubb is an analyst and author of the book Mastering the Grain Markets. Angie Setzer is vice president for grain for Citizens Elevator. And Darren Newsome is DTN's senior market analyst. Welcome to all of you. Glad to be here.
Nice to be here.
So, of course, today is a big report day, and I think that's where we should start. The big question I saw on Twitter, and I'm sure all of you have seen it as well or heard it from some of your colleagues, USDA dropped total planting acres by about 1.2 million acres. What are your thoughts on where those acres went and what's going to happen with that?
I think when I think of it, I can explain how they came into being since 2008. There was certainly that observed trend for farmers to go out and clear river bottom ground or take out old hay fields and take out pastures and move away from livestock into corn production when it was so profitable in those years. But Delaney, I honestly could not tell you. I have not observed anybody going back into pasture. I don't know how that total acreage disappears. I don't have an answer, but maybe somebody's got a...
I have a partial. I mean, just driving down from north central Iowa into Des Moines and into the area where we are filming this right now is housing developments. There used to be fields just north of here that are now apartment buildings, and it continues to spread north. I mean, I'm not saying that makes up for a million and a half, but I think it's pretty common. I was in Fargo this week, same thing. Your urban sprawl, I think, is taking a portion of it. I don't know, like I said, if it accounts for that full million, but I would say it's a pretty solid amount that we may see showing up.
That's probably, especially the Eastern Corn Belt, right? Like even when the expansion was happening, that expansion was a Western Corn Belt story, and the Eastern Corn Belt has sort of...
Well, let's not forget, this is an intentions report. It's not a final report.
Yeah.
And second, over the last 20 years, 50% of the time, the reports can go either way on the final number by 800 to 1 million acres. So when I look at it, I think one of the reasons we're seeing the reductions is because of the financial situations. I think bankers went to their clients and said, listen, we need a good plan here, otherwise we're going to need you to cut back because we can't have a third year in a row of tough prices. When it's all said and done on this rally with December corn back well over $4 and November beans at $10.50, guys are going to plant and wherever they can, as long as we get the weather this spring.
Darren, do you have any thoughts to add?
No, I was going to agree with Mark. These are just, these are prospects. This is prospective plantings. This is a survey that was done. What are you going to plant? Oh, I have no idea, so I'll just say this. You know, we came up a little short of what we had in 2017's final, quote-unquote, final numbers. It's just how the math worked out. That's not the reality of the situation. As Mark said, we're going to continue to plant the acres. The financial situation was such that everybody was looking, you know, rather bearishly at it, and they trimmed their numbers a little bit. When the planters start rolling, those 1.2 million acres or whatever it was, they're going to get planted.
Okay. Darren, I'm going to throw it back to you because we're going to start here in the wheat markets, and I know you're a wheat guy. We saw quite a bit of acres switch here from potentially corn and soybeans to wheat acres. Is that what you were expecting? And the trade obviously wasn't expecting that.
The bulk, well, here's what's interesting. You know, the bulk of what we saw in the wheat was in spring wheat. And earlier this winter, and I know you were just in Fargo, Angie, I was in Fargo earlier this winter, and the talk then was that, you know, along the eastern part of North Dakota at least, that we were going to see, you know, more spring wheat acres going in. It was going to take the place of corn. They're tired of the dollar plus under basis. They just weren't going to plant corn anymore. Or that they were going to plant corn, but it was, more of it was going back to spring wheat. They like spring wheat up there. So it really wasn't a shock to me that spring wheat acres went up. Then you get into the, you know, the markets, and the winter wheat markets have rallied. Did this do enough to buy some acres away? Well, obviously in parts it did. You know, you go out to the Southern Plains, I seriously doubt if we saw, you know, that much interest coming out of it. I haven't looked at the state numbers. So overall, the increase in spring wheat, not a huge surprise.
But also subject to the problem of this being prospective and running up against physical reality. There's still snow cover in Minnesota and North Dakota. So through the month of April, that soil temperature is going to have to rise pretty dramatically, pretty fast for those acres to be a reality.
And when it's all said and done, we were down at 15 cents in Minneapolis wheat today. So the market is just basically correcting some of those spread differences between Minneapolis and Kansas City and Minneapolis and Chicago, which maybe the market needed to do. So again, when it's all said and done, are these going to be the final numbers?
Of course.
We'll see.
Of course. What about the quarterly grain stocks report? We also had that report drop today. When we look at wheat specifically, nothing of surprise there, I'm assuming?
No, we saw a little bit of a drawdown in stocks, came in a little slightly below expectations, I think, but nothing out of the ordinary, especially considering that we saw corn come in a little bit higher. I think we may have some wheat feedings going on, which I've always argued against, but I think, you know, if you wanted to look at the stocks numbers and try to glean some sort of information out of them, that would be what you could say or reason.
The wheat stocks number was actually quite bearish, coming in almost at 1.5 billion bushels, 3/4 of the way through the marketing year. This projects to an ending stocks of 1.1 billion, and that's still quite a ways above what USDA is increasing its ending stocks for all wheat every month, it seems. They're trying to come back up to the reality that we're not moving anything. We don't have any demand for what we have.
Because although export sales have been strong, we're not getting it shipped out.
Well, export sales are strong, but they're not that strong in wheat. I mean, wheat's still running behind sales shipments, so we can't move any wheat. And right now it looks like we're going to have ending stocks of about 1.1 billion bushels, and 1 million bushels is too many when you're talking about ending stocks of wheat. And now we're talking about 1.1 billion bushels. So, you know, it's against that backdrop that, yeah, you know, you sit there and you look and say, okay, wheat was up, whatever it was up, 8 to 10 cents a day, and you go, that's a gift, because based on the ending stocks or the quarterly stocks number, certainly shouldn't have been that way.
And really, when you look at the quarterly stocks reports, bearish kind of all across the board here, specifically corn and soybeans were the big stories for today's markets. The quarterly grain stocks report really didn't have any effect on today's market prices, did it?
No, and I think that tells you a little bit about what you need to know about commodities right now. We're going into an inflationary pattern, or the belief is that we could be entering into an inflationary pattern. And I think that because of that and because of the concern in the outside markets and things of that nature, you could see investors coming in. Now, I'm not saying it's a long-term thing, but it seems as though at this point in time, the structure, or the buyer structure, or the buyer interest at this point is focused on that bullish piece piece of information. I mean, you could lay out 1,000 different reasons for why you could be bearish soybeans, but the market is monitored and watched and based where they're putting their money on the one bullish factor, which has been Argentina. And so that tells me a little bit of what we could see, you know, down the road is it may not make sense at times, but if the market has a bullish morsel, they may grab it and run with it at this point.
Well, you've got the funds long up to here in corn and beans. You've got carryouts on the soybeans that could be huge. Even if we do put 2 million acres less in the ground, it's 60 bushels an acre. You're going to trim 120 million off of a what? A 750 carryout or a 700 carryout, and still wind up at 580, which is 30 more million now than we got. I think this is a gift, and with these funds being long, you know, I've always said you get at least one great marketing opportunity every year in the markets. We had a great opportunity 3-4 weeks ago. You're getting a second one here
Today,
now. Take advantage of it.
Take advantage of it for sure. I guess the other big question is planting intentions is again an intention or an estimate of what folks are going to plant. Corn and soybeans both were below trade estimates. When you look at actual plantings, do you think that that's going to reflect what the USDA has projected?
I think the USDA accurately identified that soybeans look more profitable than corn, and that anybody who is up in the air about one or the other or a more specialized mix will favor soybeans. That's probably going to be reality, that there might be more soybean acres than corn. But whether it's less than 90 or more than 90, who knows? And I've never been someone who believes that planting intentions from one year to the next are that wild or that up for grabs, because this is not a one-year strategy. A farmer doesn't look at this just at a 2018 prices and make my decision on that. We look at that as a multi-year strategy, and how do you diversify and have, you know, your eggs exposed across multiple markets year after year after year, so it doesn't help to have corn after corn after corn for disease pressure or other management decisions. So I'm not too worried about the ratio of acres of soybeans to corn changing between these numbers today, but certainly the actual numbers could change.
Of course, Mother Nature is going to have the final word, right? I mean, you've got the heavy rainfall and overly wet conditions in the Delta and in those areas right there. You've got snow cover still once you get north of Des Moines, and cold temperatures in the forecast for 10 days from now. We're almost halfway through April, and so I'm not saying that you get worried at that point in time, but it is something that people will start to change their intentions on planting. We'll get some sort of crop planted. It's just a matter of what they end up putting in the ground.
Well, and like you say, Angie, about any sort of a bullish news item, certainly bullish speculators could make hay out of a late planting or a cold, wet planting. That could be a bullish item that comes in here.
Yeah.
Well, the weather guy I listen to, which I think is pretty good, is the guy at the University of Illinois, and he's been saying very consistently, North Dakota and South Dakota, we're going to have a cold, wet spring. We're going to lose some acres up there. There'll be prevent acres up there. And certainly in South Dakota, it's going to make a difference nationally, not so much in North Dakota. But isn't it curious that this morning I wouldn't have discussed that we generally make our contract highs the last Friday of the month because we were so far away from it. Yet in one day, here we are, the last Friday of the month, making contract highs. You know, maybe if we gap open and close higher on Sunday night and Monday, maybe we can have another 30 days of up. But in my opinion, this is a great marketing opportunity right here.
And, you know, not to interrupt you, Darren, but going off of that, we were pretty bullish today. We had pretty significant increases in corn prices. Have things changed, in your opinion, since the beginning of the year for corn?
Well, absolutely not.
Of course not.
Absolutely not. I mean, it's still a bearish market.
Okay.
I mean, if you take today's numbers, I mean, Mark touched on the soybean situation, where if you take the quarterly stocks of 2.7 billion bushels or whatever it was, and you take that out, no, I guess it was 1.7, excuse me, worse than it was, 1.7, and you take it out to the end, we're still looking at 700 to 900 million bushels ending stocks, depending on what second half demand is, if it runs
if we delay plantings and it's going to go into beans,
exactly,
it gets worse.
And then if you look at the corn, coming out at about 8.9 billion bushels today, that projects out to at least a 2.7 billion bushel ending stocks number. So, no, this market hasn't changed a bit, but it does take me back. And I think one of our questions was, do these reports matter? Certainly they matter. Because look how the traders reacted. Mark talked about it. It blew up all the charts today. I mean, a guy like me is going to have to spend all weekend long going over charts explaining why these chart patterns have changed. So you got to, first you look at the daily, well, those blew up. So you look at the weekly, well, those aren't any better. So now you have to go out to the monthly charts and see if there was any real damage done. But no, the markets haven't changed at all. I mean, the traders' one-day opinion, and that's what matters. I mean, this is what we're down to. USDA makes markets move fast, as we saw today. But the overall supply and demand situation hasn't changed, and it's nowhere near what USDA has said it is.
What has happened is since the beginning of the year, what's changed in this market is the funds have gone from heavily short to heavily long, at least in the corn and the beans. And again, to me, it makes a market.
How much of today was defense of that position? Because, I mean, corn and soybeans were both on the ropes going into this. Soybeans were actually down 4 or 5 cents.
And they had been liquidating.
They had been liquidating. And so all of a sudden you get this one little bullish nugget like Angie and Elaine have been talking about, this acreage number, which is a made-up number anyway, but they can point to that. And you're sitting there and you're looking at the screens at, at exactly 11 o'clock and things go up 30 cents. It smelled of defensive a position, and that usually doesn't last all that long.
Right, we've got a 3-day weekend. You talked about potentially having a gap higher, or potentially people could think this over the weekend and correct. I don't know what your sense would be, but.
Well, I think it's important to separate corn and soybeans because I think they're moving in two very different directions from a global perspective, at least in my opinion. I mean, you look at what's going on in corn, you do have that Argentina that no one has discussed whatsoever. Argentina is the 3rd largest corn exporter, which I guess, that and $1 will get you a cup of coffee. But the thing is that they are very important when it comes to the overall global supply and demand setup. Brazil, right now, the USDA has not been quick to adjust based on what CONAB's figures are, which has been a 400, 500 million bushel reduction versus what the USDA is saying. And China has changed their approach. Now, those are not, in the current market setup that we have when you're discussing the ending stocks that we're looking at and things of that nature, that's not necessarily a bullish thing, but it definitely does lend a little bit more support, I think, going forward for corn. Soybeans, at this point, it's like trying to push a volleyball or a beach ball underwater. It just seems like they just don't want to go.
I would agree with that, Angie, but I just can't. Because I look at the May-July spread.
Yeah.
We got a very strong carry.
Yeah.
Market's saying, we got plenty of old crop. I mean, we're not going to run out of corn through the end of this marketing year. We look at basis. You look at basis every day.
Yeah.
Basis is not good. I mean, yeah, it's been improving, but that's just because it started in such a terrible place. If we look at it compared to average, if we were actually concerned about Argentina, and if the market, not just traders who don't know anything, but if the markets were actually concerned about global supply and demand, we would see that May-July spread changing. We would see basis firming.
But I don't
think it's not happening.
Yeah, and I understand exactly what you're saying, but I don't think it should with a 2 billion bushel carryout at this point in time. Now you look at new crop spreads, and they are saying that there is some concern that we may potentially need to have. We could see a production issue. Now, of course, typically you do see tight spreads in the front, ahead of time because that's where your
there's just
your
so many
risk premium
there's so many uncertainties. You don't know how to place those your bets on the spreads this far out. Market, I mean, weather. You've got all this stuff that could still happen. Acres. It's all still question marks. There's nothing set in stone.
To me, I think anything out of South America from a production reduction standpoint will show up more summer forward. Last half of the marketing year, which we're actually entering into, which is crazy, but more the fourth quarter of the marketing year into the first quarter of next year, and so that would be your Sep Dece March, and so we've got to watch that on the spread side. But like I said, I'm not sitting here trying to paint a picture of why corn needs to rally significantly, but I do think corn has a more support underneath it from a pricing standpoint than what it had January 1.
And when you look at the July-November bean spreads, they've gone from 44, 48 cents down to, I think it was 5 cents today.
Yeah.
It's certainly telling you there's no near-term demand. You look at the export figures this morning, there is no demand.
Yeah.
So.
And Elaine, would you agree with that?
Yeah, I would agree. In an environment where we have this much inventory, as an end user, there's no reason why you should feel any panic about having to outbid your competitors. You know that you will be able to receive the grain that you need. I mean, farmers could turn off one of their combine header rows and still we would have enough corn for next year, and soybeans probably. I mean, there's no way, unless we had a series of multiple years of production problems, that we could get supplies down to a bullish enough level where we would talk about supply rationing or price concern in that sense. So no, there's no reason to get worried about a lack of supply yet.
And we haven't talked about the elephant that's in the room.
Let's address it.
Trade wars.
Yes.
And what can happen with the president and China, what's happening with North Korea and China, and are there any games being played there? We don't know. We do know that the Chinese are some of the best traders in the world, and they will say things and float things and then take the opposite positions in the market. We've seen it time and time again. But the fact of the matter is there is some tensions there. The Chinese talked about pork and not soybeans, so the soybeans tried to rally on that, but then before this report, we were right back down there at the lows. So we have to keep that in mind with a lot of grain that we have out there. God forbid there is any kind of a trade war.
You know,
it's
and
going to be an issue.
I would like to address a question we got in on social media specifically about that. Jeff in Ontario, Canada, on Twitter here wants to know, will the American farmer reconsider their intended soybean acres due to the trade issues and possible tariffs with China? I know we haven't seen that specifically addressed with soybeans, but
to me, honestly, in my interaction, 9 out of 10 farmers believe that nothing will come of the trade war when it comes to soybeans.
There's that, and even if they did, there's still, to the degree that they change any acreage decisions from one year to the next, which I already said I don't really think they do, they're basing their decisions on a crop insurance price that's set in stone no matter what happens at this point.
And the ability to already have hedges or sales in place at current values, and that's been something that we've discussed with our growers, and I've discussed, you know, over and over and over again. If you're making decisions based on planting, or making decisions on what your operation is going to do based on current prices, then you better be at least capturing some of those current prices.
Absolutely.
I think if you go back to Mark's point in soybeans and use soybeans as an example, and you look at what the second quarter demand was, this is showing us that we might already be feeling the effects of an unannounced trade war, because I mean, soybean demand over the second quarter, Dec, Jan, Feb was horrible.
Right.
Yeah.
I mean, you look at it on the chart compared to previous year's second quarters.
Well, and the rumblings of the threats of the solar panels. I mean, that happened a lot before the steel thing happened. So,
December,
so China could be making these moves.
So you can clearly see it
already.
on
And they'd already been laying the course on, you know, our quality, FM,
That's a fun
low
game,
protein.
isn't it?
That's just it. And so, I mean, there's plenty of ways too. That's the scariest thing about loading anything onto a container or into a boat is it can still get over there and get rejected. I mean, and so that would jar a market much more, I think, than coming out and saying. I mean, think back on corn when they rejected for the 162 trade or whatever. I mean, that was there was no conversation about it. There was no foreshadowing of it coming. It was just all of a sudden we were seeing loads be rejected. And so there's still that unfortunate chance, I guess you could say.
And let's not forget, there doesn't have to be a tariff or an embargo. Somebody just has to say it.
Yeah.
Just the words. You know, the president can tweet something and tank these markets. The Chinese can say something and rally or tank these markets. They don't have to do anything. It's just the perception by the public of what they're saying that can move this market significantly. And don't think that there aren't people that know about this and are in a position to take advantage of it, like the Chinese.
I think you saw that happen, and I mean, and I know there were a lot of other extenuating circumstances in the hog market, but look at what's happened there over the last 2 months, and we get the first announcement of a tariff placed on an agricultural commodity is pork, you know, a pretty substantial one at that, and so I think there was foreshadowing of that. Like you said, there wasn't, I mean, it was on no one's radar, and then it was announced, and we had this strong 2-month pattern of lower prices. And so there it was.
With that being said, do you think we've put in a low for hogs specifically?
Yeah. He who picks bottoms.
You had a pretty impressive day. On Wednesday, you had the outside contract low-key reversal.
Yeah.
How many key reversals have gone bad in the last several years with these computers and the funds? I mean, it looks okay, but
there could be a reaction on Monday to the Hogs and Pigs report. That there will be new information coming into the market, and you could, I suppose, argue that it would be a slightly bullish report, and that there were some traders who expected the increase in supply to be higher than what was actually in the report. But I wouldn't get too bowled up about it, because the numbers is one thing, but the actual weights that come into the processing plants is bigger.
I want to jump. We're going to continue this discussion in Market Plus, but I want to jump really quick here into the feeder markets, because we were limit down in a couple contract months today. Was it a flash in the pan or a reaction to today's reports? What are your thoughts? Briefly.
If it was a reaction, it was an overreaction.
Yeah.
I don't know. Feeders and live cattle have both been trading down. Yeah, it was probably an overreaction to corn rallying for whatever reason. Corn rallied, and there's still this old thought process that feeder cattle are going to go the opposite direction of corn. But they've been in a downtrend. They look like they needed to break again. Should it have all been in one day? Probably not. But that was the momentum that we saw build today. We saw, all of a sudden there was no one willing to step in and put the brakes on this thing, and that's what you wind up with is a limit down day.
All right. Well, I hate to put a break on this discussion, but we're going to continue it in Market Plus. So that wraps up the broadcast portion. Elaine, Darren, Angie, and Mark, thank you so much. That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Have you subscribed to our YouTube channel? As of this week, we are 3 short of 600. Go to youtube.com/market-to-market and push us over the 600 mark by subscribing today. Join us next week when we explore how opposing forces have found common ground fighting for the Mississippi River. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.